So thank you all for joining us this morning. I'm really pleased that you've been able to attend and be part of, in fact, our first series of webinars that we are bringing to you, our advisor audience. I'm going to start with just giving you a bit of an introduction to Standard Life in Finance. That's the first of the series of webinars. And what we've done deliberately, in fact, is we're going to be taking you through a journey where we've got a total of 5 webinars taking place over the coming weeks. So the first one is giving you an introduction to ourselves and what our proposition can do to support you and your customers. Next week, we've got a lead generation session, and we're really pleased to be able to bring that in conjunction with Philip Calvert, who's done a lot of work with advisors in the financial services industry. And that is specifically focusing on supporting you with generating customers and typically via your network of introducers. So if you're free next week, we will absolutely ensure that you get the link to register to that. After that, the next couple of sessions is actually going to take you through the operational journey. So you'll have an opportunity to meet one of our underwriters, Patrick Lease. We're then going to talk you through a session with our post-offer team, our case owners team, and Enact. And our last webinar is actually going to be on all of the tools that we have available via our website to support you and your customers, and typically you when you're giving your advice. But I'd like to start with giving an introduction to Standard Life in Finance. And for those of you that don't know me, my name is Sanjay Gadhia, and I'm Head of Sales at Standard Life in Finance. You can obtain and capture my direct contact details on this slide. Alternatively, if you wish to drop something in the chat box, please do, and I'll ensure I can give you my details hereafter. And just with regards to the chat box and the Q&A box, if you have any questions as I'm going through the presentation, please don't hesitate to put them in, and we'll absolutely have an opportunity to pick up any questions post-presentation. So a bit of background about Standard Life Home Finance and talking about our brand values. I'm just going to take a step back slightly further, if I may. We actually give you a bit of an insight in terms of when we came to market. So Standard Life Home Finance was born in October 2021. So we've just in fact surpassed our 3-year anniversary as a lender in the later life space. Our sole funder is Phoenix Group. They took over the Standard Life brand back in 2018. They have a wealth of experience in the later life market pre-Standard Life Home Finance launching. They've already been funding 2 product lines for 2 different lenders. They had a desire in 2021 to launch as a lender direct via advisors, utilizing the Standard Life Home Finance brand. And as such, the brand values that we carry since launch, and we continue to do so, is as follows. It's no surprise, in fact, that in the 3 years that we've been able to support advisors and customers alike, that we absolutely understand that Standard Life Home Finance is a later life brand that both you and your customers can trust. We've been around for centuries, and there are many of our customers that are akin to the brand, typically because they may have other financial solutions supported by Standard Life. When we came to market, we brought some absolutely fantastic market leading features to this space. And furthermore, we have continued with innovation, such as our most recent, which is the launch of our interest serve plan. And I'll touch upon that a bit later. And lastly, it's about supporting. We've got a fantastic team, both in sales and our back office operations, that focus on supporting you day in, day out, with it be it pre-application inquiries or support with the application once it's going through to completion. And furthermore, post-completion, we've got a great servicing team that can assist the end customer with any queries they may have. Also, our portal is designed to be available to you 24/7. It is paperless and signatureless when it comes to submitting the applications too. So talking about our brand values, this is how we've been recognized already in the last 3 years of operating. And in fact, I'm going to be slightly cheeky here and just notify you that only last week I had the pleasure of going into London and attending the Times Money Mentor Awards, where Standard Life Home Finance were the winners of Best Equity Release Provider. So that's one more here to add. But we have a strong Trustpilot review. We have 5-star rating de facto plans, and as you can see here, recognized as Later Life Lender of the Year at the Mortgage Awards. So let me delve a bit deeper in terms of our market leading features. What can we do for your customers and your current customers today? So as it outlines here, we have a fixed ERC. There are some lenders out there that give your customers the option of variable ERCs, but we have a short fixed ERC of only 8 years. We also offer your customers downsizing protection. Now, for ourselves at Standard Life and Finance, downsizing protection is available for your customers from day one. Partial repayments. Being an Equity Release Council member, we ensure that your customers must have the ability to make partial repayments. And with ourselves, your customers can make up to 10% of the initial loan per policy anniversary without incurring any early repayment charges. This ERC exemption is one that I am extremely proud about since we've launched, and it's something that I'll continue to be passionate about if you hear me present in the future. But it is applicable on joint applications. And I'll touch upon that in a moment. And lastly, drawdown. So we offer your customers both lump sum and drawdown options. And for ourselves, when it comes to drawdown, the minimum your customer can take out of their reserve facility is just £500. So a great vehicle for customers that may be looking for income when you're discussing later life options with them. So just to hone in on these 3 of the 5 features that I've mentioned to you previously, I discussed the fact that we have a short ERC period of only 8 years. Accepting that typically ERC periods start from 10 years and can go as high as 15 years. Notwithstanding, there are other lenders in the market that operate with ERCs of either 7, 4, or in fact 0 ERCs too. But the structure for our ERC period is outlined here on the left-hand side. It simply starts at 8% in year 1 and decreases 1% each year. So in year 8, your customer would incur a 1% ERC, and from year 9, your customer is in fact ERC free. This ERC exemption on the middle slide here, on the middle box here, sorry, should I say, it is only applicable on joint applications, and it's triggered on one of 2 life events. So if one applicant was to sadly pass away or have to reside in long-term care permanently, what we can do for your customer is remove that ERC from that moment, on that life event, and there is no time limit. It is an unrestricted ERC-free window. Yes, this feature is available with other lenders and other lifetime mortgage providers. However, it typically has a 3-year ERC-free window. But with ourselves, you can assure your customers that on one of these what if scenarios, what if I sadly pass away? What if my life circumstances change and I have to end up residing into care? You can give them comfort in knowing that us as a lender will remove that early repayment charge if for whatever reason they wish to redeem their loan. And I touched upon downsizing. Now, this again is available from other lifetime lenders, but it typically starts from year 5. But with ourselves, we give your customers the downsizing protection feature from day 1. And our definition of downsizing, as I appreciate it can vary lender to lender, but it can be triggered if your customer purchases a property in the UK and at that point in time, said property does not meet our underwriting criteria. So for today, one example I can give you is an age-restricted property. Right now, Standard Life Home Finance do not accept age-restricted properties as one that we deem suitable to lend on. So if your customer was to take out a lifetime mortgage on a property that is suitable for lending today, but at any point from day 1 post-completion, due to life circumstances, they end up moving to an age-restricted property, they will contact us. We will understand and ascertain that that property is age restricted, and as such, we'll remove that ERC. So trigger 1 for downsizing protection is a customer purchasing a property in the UK, and at that point in time, the property does not meet our criteria. And a second trigger for downsizing protection is if your customer opts to move abroad. So how that's played out in reality for some customers who have already taken out plans at Standard Life and Finance is where they potentially may have a holiday home abroad. I've seen two of these very recently. One was where a customer was fortunate to have a holiday home in the south of France, and it was his desire at some point in the future to make what is his current holiday home his permanent residence. The advisor contacted us and asked whether or not the customer would benefit from the feature, and we absolutely informed him that because the customer is moving abroad, they will benefit from downsizing protection any point from day one. And in effect, furthermore, you can give your customer that comfort that if they were to move to that property, this downsizing protection feature is available, and you are enabling them to remove that ERC and uh, redeem their lifetime mortgage with us without incurring any early repayment charges. So let's talk you through our proposition here. So our plans are called Horizon, and we offer your customers both lump sum and drawdown options. The LTVs on a smaller shelf of Horizon 200 start at 2%, and that is for our youngest aged applicant aged 55. And for joint applications, we can go as high as 51%. And for a single applicant, our Horizon 650 plan as of today is only available on a single applicant basis, but we can go as high as a 52% LTV. The property values are fairly consistent with those available in the market, starting at 99,000, can go as high as 5.1 million. As for the loan amounts, starting at 15,000 and can go as high as 1.5 million. It's worth noting at this point that should you ever obtain customer inquiries where the property value and or the loan amount exceed the parameters that are published here today, we can consider these on a case-by-case basis. So whilst I respect that this may not appear on your sourcing platform of choice, please do not discount Standard Life Home Finance. Get in touch with your dedicated account manager. We will take the details from you and we'll ask the funder whether or not this is something we can consider. And lastly, just touching upon the age range, the youngest applicant must be, well, the point of entry for our lifetime mortgage plans is as expected and is standard across the market at age 55. And for the oldest age, this is a point of application that your customer, the youngest applicant on a joint scenario, must not be over the age of 85. So if today the youngest applicant is a day younger than 85, you can submit the application and we will progress the application all the way through to completion. So in short, it is at point of application that the youngest applicant cannot be over the age of 85. The other thing to bear in mind here, in fact, is that we also have the feature known as aged next birthday. So if your youngest applicant's birthday is coming up within the next 8 weeks or 56 calendar days, your sourcing platforms will give you the ability to take that birthday into consideration. So what can that do for you and your customer? It can do one of two things. It can increase the loan to value by between 0.5 and 2.5%, dependent on the loan to value curve that they require. Or what it could possibly do is reduce the interest rate applicable to their loan because the max LTV drops them down a shelf, and therefore your customer can benefit from a lower interest rate. So age next birthday is a feature. We can take it into account if the youngest applicant's birthday is within 8 weeks of your KFI being generated. My only caveat is that said application cannot complete until on or after that birthday taking place. So that's an overview of our product, our LTV, and the perimeters that we have in place. The other thing I'd like to bring to light is our Horizon Interest Reward Plan. So this was new innovation that Standard Life Home Finance came to the market with in January of this year. It is only available as a lump sum plan. We do not offer it as a drawdown solution as of today. And the loan to values start from a Horizon 300 plan upwards. So the lowest LTV for Horizon Interest Reward Plan is 8%, and can go as high as 51% on a joint basis or 52% on a single basis. So giving you a bit more information in terms of our Horizon Interest Reward Plan, how can it benefit you and your customers? Well, what we enable your customers to do is commit to servicing the interest payments. And in return, if they're able to commit to these monthly payments, we will offer them and they will benefit from a rate discount. And just to add again, it is on a lump sum and on our fee-free plans only. So dependent on how much interest your customer wishes to serve, and for ourselves, these are discrete percentages of either 25, 50, 75 or 100%, and the term that they wish to pay it for, which is 5, 10 or 15 years. And these are discrete also. But dependent on what percentage and which term your customer opts for, the discount ranges from 2 bips to 45 bips. Now, as long as your customer makes those payments of that percentage for that term of either 5, 10 or 15 years, as long as all payments are fulfilled, your customers are going to benefit from that lower interest rates for the duration of their lifetime mortgage. In addition, we will allow your customers to make those 10% overpayments that I mentioned previously during the term and thereafter. And it's up to 10% of the initial loan without incurring any early repayment charges. And lastly, on our interest serve plan, for ourselves at Standard Life and Finance, we have no requirement of evidence with respect to the affordability and the assessment of. We would know that as part of your advice process, you will discuss whether your customer has the appetite or desire to commit to making monthly payments and whether they have the non-disposable income to do so. Your own firms and or networks may have a requirement to evidence said affordability, but for ourselves, we will not be asking you for, say, payslips or bank statements. And the reason for this is our interest reward plan is actually protected and covered by the Equity Release Council standards. And the downside to your customer not making those committed payments for said term is that they will revert back to their non-discounted rate. So let's just bring this to life here, if I may. This example here shows a 65-year-old. Property value here is 400,000, and the customer is opting to release an amount of £100,000, which equates to a 25% LTV. This example here in front of you demonstrates a roll-up over a 20-year term. So what you'll see here on the top row is this is your classic lifetime mortgage customer who informs you as part of the advice process that they don't have the appetite nor the desire, or potentially they don't have that non-disposable income to make any form of repayments, be it committed, interest served payments, or those ad hoc payments. So naturally, you will outline the pros and cons of a lifetime mortgage solution. And what will happen after this 20-year term is that £100,000 will roll up to just over £330,000. But in this second row here, your customer is informing you that they are able to commit to servicing 25% of the interest for a term of 5 years. So what this shows is the discount that we will apply is 2 bips. Your customer will be making £125 a month payments for the 5-year term. You can already see what's outlined here. The gross saving after that 20-year term, which is 15 years at full roll up on a discounted rate of 5.98. And then they have 75% of the interest accruing during that 5-year term. But the gross saving that your customer will be making over that 20-year term is just over £26,000, and a net saving, taking into account the 25% interest payments for that 5-year term, is still significant at just under £18,600. And on the other end of the spectrum, for this particular example, the customer is opting to service the interest for our longest term of 15 years and our full interest payment of 100%. So in this example, your customer would have a 6% rate monthly. They are benefiting from a discount of 30 bips. So the rate that it will be applied to your customer's Horizon Interest Reward Plan will be 5.70%. It outlines the monthly payments there at £475 a month for 15 years. And lastly, I'll just touch upon the net saving that your customer will make after the 20-year term is just under £120,000. There are other interest serve plans available on the market, and in fact, we've seen one lender operate in this space and introduce their interest serve plan within the last few weeks. And I genuinely welcome the competition in this space because this not only outlines that there is a need for this solution and it is growing by way of the interest serve space, but it also highlights and recognizes the impact of the FCA and what the regulator has projected on our industry very recently, and taken into account consumer duty too. So I just really want to do a side by side with respect to how our interest serve plan compares to others that operate in this space. So first and foremost, as I mentioned, providing your customers make those monthly committed payments for the said term of 5, 10, or 15 years, that discount will remain for life. Whereas with other lenders, they do apply a discount, but it stops at the point that your customer stops making those monthly payments and then reverts to roll up. We offer your customers a very short ERC period of only 8 years. Other lenders in this space offering interest serve do not have an ERC period of 8 years. I want to say it's either 10, or I'm probably going to go as far as saying it is a 15-year ERC period. I mentioned the point about making those overpayments of 10% of the initial loan without incurring any ERCs. We allow your customers to make these overpayments during the term as well as thereafter. Other lenders who give interest serve plans do not allow that. Our downsizing protection feature is available from day one as opposed to year 5. And we've got that ERC exemption that never expires. It was applicable on joint lives, as I mentioned previously when I talked through our features. So how can you transact with us? If you're not already registered, please visit our website, standardlifeinfinance.co.uk, and register via our portal Connect. We have no requirement for you to submit any of your suitability reports when you are recommending our Horizon lifetime mortgage plans. And just to bring out some of our service levels, um, you know, I'm so fortunate that we've got a fantastic advisor community who publicly broadcast how well we've been doing when we've been servicing their customer applications. But these are based on our own data for completions that took place between the 2nd and the 29th of September. Application to offer in 3 days, offer to completion in 15 days, and we were servicing customers from app to completion in 19 working days. I talked about us launching in October 2021, and we've already supported thousands of customers and really making a difference in their life. And that's thanks to you as our advisor community. But we really want to ensure that we are showing and showcasing how our lifetime mortgages are benefiting end customers. And we've got a fantastic case study that's available on our website. So if you do wish to see a bit more information about how we've been able to support this 76-year-old, release £400,000, where the single applicant was based in London, again, do visit our website. We've got a plethora of assets and guides and brochures available to support you as you guide your customers through our standard life and finance plans. Thank you for your time. I hope you enjoyed or at least took some information from the navigation of our proposition. I'm just going to pause for a moment and stop sharing, and I will open the floor up to any questions. Yes, I think I've got a hand raised here. Let's see if I can take you off mute there, Nigel. I want to take you off mute, Nigel, if that's okay. I think you might need to take yourself off mute if you're able to, and I'll happily field your question. If not, please feel free to put it in the chat.
Oh, is that? Can you
Oh,
hear me now?
we can do indeed.
Yeah.
Yes.
Okay.
Thank you,
Right. Yeah.
Nigel.
This is you're talking about downsizing protection. Now, I heard about a case. It wasn't a case of mine where, and I don't think it was with Standard Life. I don't know what lender it was where the clients moved downsized to a flat that had too short a lease to be acceptable to the lender and wanted downsizing protection, but apparently the lender told them, no, you've got to extend your lease. We won't give it to you, which didn't seem to be fair because that would obviously cost money to do that. But I assume that you would be okay if someone moved to somewhere with a too short a lease, presumably you'd be okay with that being downsizing protection, would you? Or...
Yeah, it's a very client-specific question, Nigel. It's one I'll absolutely take. I mean, on the face of it, I'd like to think that we would look at the scenario as it stands, without um, enabling the customer to incur any additional costs. So, if I mean the way I'm thinking that we would allow it to go through, Nigel, is you know if I was to treat that as a new business inquiry and the advisor was to come to us and say this is a scenario, I imagine that the only way we'd say that we'd be able to consider it was if the customer was to, as you mentioned, increase the term. But if the scenario played out at that point in time where the customer wishes to port the loan, and that's when we recognise that the property is not suitable for lending, I'd imagine that we would allow that downsizing feature to be enabled for said customer. It is very specific, Nigel. I understand it's not one of your customers, and you weren't too sure if it was one for
No.
Standard Life and Finance, but I will happily and I'd happily take that to our further advance and our moving team and check
Yeah.
whether or not that's
I only
something
thought of it because
would allow.
I went to see some prospective clients last night, and they're in a
Uh-huh.
house,
Yeah,
but they said, "Well, we're not intending to ever downsize, but they do realise that maybe mobility problems might mean they have to move to a flat in the future."
sure.
And I thought, well, what happened? It just occurred to me, and I didn't even say anything to them. It just occurred to me, oh, I wonder what would happen if they go somewhere with a, say a, I don't know, 85-year lease or
Yeah.
something.
It's an absolutely valid point there, Nigel. It's one I'll pick up, and if you don't mind, I've got your contact details, so I can come back to you
Yeah, sure.
and let you know. But thank you for the
Yeah.
question.
Okay.
Thank you. Right, Mike, I can see your hand raised as well, sir. If you can take yourself off mute, I'll happily field your question too.
Hi, Sanjay. I was just
Hi,
coming
Mike.
back from the last comment. I think if someone came to me and they had a really short lease, the first thing you'd be saying is, is this a good idea? Anyway, I'm sure the guy would be doing that. And I wouldn't expect any lender to do it with a really short-term lease
Mhm.
as well. Uh, um, Short being probably 50, 60 years remaining,
Mhm.
because obviously if they weren't happy there, they could have problems selling if they're moving on.
Yeah.
But obviously it would fall under your day one thing anyway, because it wouldn't be suitable. The other thing, of course, is you could possibly extend the lease and increase the amount they're doing to extend the lease.
Yeah, that's true. That's great
Just a
feedback.
thought, that was all.
Yeah, that's good follow on as well. I appreciate that, Mike. Thank you.
Thank you. Product's great, by the way. I like the product, and yeah, I hopefully do some more business shortly.
Yeah, I mean, like we've since launch really, and this is genuinely advisor feedback to myself when when I speak to advisors on a regular basis. But I think what a lot of people have enjoyed about our plan and how it can benefit customers ultimately is, especially on joint applications, you're looking at a relatively short ERC period at 8 years, and I say it's relatively short because that's contextualized with the rate that we apply. You know, wholly aware and appreciate that, and respect that there are other lenders out there that operate with shorter ERCs, but I guess the opportunity cost to that is that it potentially carries a larger rate. But
Yeah,
when you look at that again for a joint application, you know, you as advisors with our features can instantly give comfort to your customers because this is this is like a life-changing decision for them taking out a lifetime mortgage plan. And naturally, when we're looking at the demographics that we deal with, I want to say the average age is, I think it's sitting at 69. I think it's just gone under 70 at the moment. But they are in their later life years, and what no one can control is what's going to happen in later life. They're going to be going through peaks and troughs. But you can instantly, as you mentioned there, and as Nigel mentioned, what if I end up having to move? In the example Nigel kindly gave us, they said they have no desire at the moment, but it could be likely that they may need to move in the future. Now, yes, there are some caveats to our downsizing feature, because if it does meet our criteria, the customers can still move to their new property. They'll simply port the loan over. And if there's any residual amount remaining that is owed to us as the lender, that is redeemed ERC free too. But you can at least say, well, it's available from day one as opposed to year 5, which is where it's typically available. And then when you add to that, again, on joint applications, that unrestricted ERC exemption clause, that what if I was to pass away? What if I was to move into care?
Yep.
Now, at least you can give your customers comfort to say, well, the lender will remove the early repayment charge should they want to redeem that loan.
I think the other point, which is great, is as a lot of people actually may move into these sort of gated communities, which aren't going to be acceptable because of the maintenance charges.
Correct.
And having that day one thing coming in is great, because I think they're going to be more on the rise now, especially if people's health is suffering.
Yeah.
So it's a great feature.
Thank you. I appreciate that, Mike.
Sorry, give me the fiver later.
Yeah, cheers. Thank you, Mike.
I'll go off, Mike.
This is that awkward moment on Teams when no one knows whether or not just to stop or carry on. But I'll give it another 30 seconds in case anyone has any more questions. And if you missed it at the beginning, first of all, thank you for attending. I really hope you did get something value add to your day today by learning a bit more about Standard Life and Features proposition. And this is the first of our series. So next Wednesday at 10 a.m, cheeky plug. We have one. Sadly, you're going to have to hear my dulcets again, but it is in conjunction with Philip Calvert. We're going to be focusing on lead generation and how we can support you obtain more of these later life type customers, and grow your later life arm of your businesses. And thereafter, I'm sure you'll have an email from us to inform you. But the next session then takes you into meeting one of our underwriters. The following week, you'll be meeting our case owners team that deal with applications from post offer to completion. And I'm really pleased to say that we've got Enact joining that session as well. And then lastly, we will be navigating you through our website and the marketing tools that we have available to support you through your advice process. And if you can't wait till then, just visit standardlifeinfinance.co.uk and you'll see the case studies that I presented on the slide, the sales assets that we've got, and the brochures that are available to you and your customers. So I'm going to pause there once more. And if there are no further questions, I'd like to once again thank you for your time and for attending. And I look forward to seeing you all soon and supporting more of your customers. Have a great Wednesday and a positive week ahead. Thank you very much.
Thank you, Sanjay.